Hey everyone, good morning or good afternoon, depending on where you are. This is the TradeStation Masterclass, our technical analysis series. And today we're going to talk about inside bar, outside bar, and narrow range bar, how to find those studies on the TradeStation platform, how to apply them, and what is it exactly that they're looking for. So let's go ahead and take a look at some of the elements of these technical studies. But before we do so, here are some important disclosures. First of all, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities, and it's always a pleasure to talk about TradeStation and the platforms and studies. So I'm glad to be here. Keep in mind that every symbol and idea that I use is for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone. Past historical performance is no guarantee of future results. And for additional information on these disclosures, please visit our website, www.tradestation.com/important-information. All right, guys, let's go ahead and get started. First of all, let's talk about inside bar. As I said before, these studies already exist on the TradeStation platform. So first of all, we are going to talk about what they are, how they're calculated, and then we'll shift over to the TradeStation platform to find them. An inside bar is a bar that has a high that is lower than the previous bar's high, and its low is higher than the previous bar's low. So when we look at a picture of an inside bar, it's pretty much a bar that is smaller on both sides than the previous one. So always look at the previous candlestick and you can identify those inside bars. What is this telling us? Where a cluster of inside bars may indicate a stagnant or sideways market. It's not pushing forward the prices. It's not pushing the prices up or down. They're kind of just moving in a sideways manner. Maybe an indication of declining market activity, possibly as a prelude to a large movement in either direction. Inside bar built-in strategy generates long signals on up candles and short signals on down candles. For the next bar. This is interesting. So let's go ahead and take a look. First of all, at the indicator. Make sure the indicator is doing what it's expected to do. And then we'll use the strategy to see what the signals are. And just to get a little bit more clarity about the signals that the inside bar is generating, here they are on this PowerPoint. In fact, now that I say the word PowerPoint, I remind myself that I haven't shared this with the class. Give me just a moment while I pull up my media server. And let's see. Just a moment. Just trying to create the link very quickly here. Okay, here it is, right there in the chat. You find a link. It'll download the PDF automatically for you. All right, so inside bars may signal short-term consolidation with low volatility within a trading market. Maybe considered a continuation pattern through a breakout in the opposite direction is possible. After price has trended for an extended period, an inside bar can be a pause in price and may precede a reversal in the trend. Prices are unable to push higher or lower. It may be a sign of possible upcoming increased volatility. So yes, we're talking about bars that are not very significant when it comes to price movement. They're not very significant when it comes to volume because it's the total opposite. It's kind of the market, it's turning its activity down. It's kind of the prices are not going anywhere. So it's an inside bar, is smaller than the previous candle. It's unable to push the prices higher or push the prices lower. So it's kind of just there. So what's going to happen after an inside bar? That is the interesting part. When you have an inside bar, what's happening next? Because whenever the market quiets down, whenever the prices don't push further up or further down, that's just an indication that something will happen soon. You know, they say that there's always calm after the storm, but the opposite is also true. There's always calm before a storm happens. So we're going to look at these inside bars as indications that something is about to happen, whether it's a reversal, a breakout, whatever it is, you know. Let's go ahead and take a look at the study on the TradeStation platform, see how it identifies those candles, and then look at the strategy that goes along with it and see if there's any things that we can change and modify to make it fit our style. Let me switch over to my TradeStation platform. Let me open up a chart. All right. This is a chart of Twitter. Doesn't really matter which symbol we use. The concept is exactly the same. I'm going to bring up a daily chart of Twitter to look at some candles here a little bit in more detail. I'm going to go to studies, add studies, and the inside bar study is a study that we created as a show me. A show me is a specialized type of analysis technique that is going to mark any candle or any bar where a certain behavior happens, a particular pattern shows up. Inside bar is one of those patterns. So let's go ahead and look it up. Inside bar right here, built in to the platform, nothing we need to do to it. I'm going to prompt for editing because I'd like to change the color and the style before it goes on the screen. And that way we can see it better. In the style, well, first of all, I'm going to make the dot bigger. I'm going to make it the biggest one. And in the color, it's kind of this bluish color, which is fine. It's going to contrast okay with the green and the red that my candles are already. But I'm going to go to the inputs tab to take a look at some of the things that I can modify in this show me that'll make my visual a little bit better. First of all, price high, high, price L, low, and plot price, close. Okay. So this is using the high and the low of the bar. The reason why we provide you inputs for the price high and the price low, it's because you can change them. You know, of course, you're changing the concept of the inside bar. We already defined what an inside bar is, but you have full control over what you want that to be, you know? So the plot price is going to be the closing price. So that's where the actual dot will show up. I usually don't like my dot to appear right on the close because a lot of these bars are small in nature. If we're looking for an inside bar, we already know that it's, you know, it's smaller than the bar preceding it. So sometimes removing or putting the dot on the close sometimes just obscures or hides the candlestick altogether. So I'm going to do something here. I'm going to take the close and I'm going to add range times 0.5. What does it do? Well, it takes range is a word in easy language, and TradeStation understands when you use the word range. Range is the distance between high and low. You know, the two prices, you subtract them from each other, that gives you range. We multiply that by 0.5, so we want half of the range added on to the close. So it's going to shift the dot and put it, I'm going to, instead of referencing the closing price, I'm going to, just to be consistent, I'm going to go here from the low. Low plus the range, or no, not the low. High. So we have the dot appear at the very top. High plus the range plus half of the range. I'm going to click OK. And there we go. Now, did you have to do the formula that I just typed in? No, you don't. In fact, I forgot to do something. Let's go ahead and edit inside bar. And since the font here is so small, I usually like to share this in the chat so that you know exactly what I just typed in. I typed in high plus the range times 0.5 inside parentheses. And as you can tell, those dots are removed from the candle. I'm able to see the candle fully, and I can still, you know, identify the candles that are inside bars, okay? Let's go ahead and take a look at a couple of examples just to make sure that the criteria of the inside bar is actually um, accurate. Let's take a look at the most recent inside bar. And as you can see, the inside bar that is marked, the high is lower than the previous high, and the low is higher than the previous low. So it creates some sort of a candle, right? If I go to the drawing and I go to a trend line, and I'm going to go to drawing, snap mode is already on. If I go from this high to this high, and then I go back to drawing and I go to a trend line, and I go from this low to this low, you can see that it creates a triangle going forward. And of course, what we're looking for are these breakouts. You can see that in this particular case, this inside bar that it marked, it's breaking down to the bottom side, and maybe that's a trade that we can take. But a lot of these will have that characteristic where we can draw these lines and it creates some sort of a flag or a pennant, Let's go over here and move or zoom out. Okay, that's this one right here. Let's go to this top one and take a look. I'm going to use the magnifying glass, go here to this top one. Again, let me go to drawing, trend line, go from this high to this high. That wasn't a big change, from that high to the other high. Sometimes if you want your inside bars to be a little bit more significant, meaning that they're significantly smaller than the previous one, maybe in the calculation you can say, well, if the two highs are exactly the same, maybe I don't want to identify that as an inside bar, but technically, by definition, it is an inside bar. If I go to drawing and go to the other trend line from this low to this low, you can see that it creates that flag again. And you can see that the next bar kind of just was inside of that flag, and the next one in the same direction, but then we have a break to the bottom side. Am I saying that you need to draw these trend lines? No, what I want you to see or have a visual of is how, if you connect the highs and the lows, it creates this kind of a triangle where you can expect something to happen going forward, okay? Let's go back or zoom out and see what type of trades are generated at these points, because we do have a built-in strategy that reacts to inside bars. So I'm going to go here to studies. I'm going to click on add strategy, and let's look for inside bar, LE, and inside bar, SE. These are built into TradeStation. These are out of the box. Let's go ahead and put them on. All right, so what's going on here? Let's go ahead and maximize here or zoom in. I want you guys to see that over here, we did not get a trade. I was looking at this one at the top. We didn't get a trade. The reason why we didn't get a trade on this one was because we were already in a trade. You guys see this blue signal back here? So it entered a long trade back here, and it didn't trade again because the following dots were all in the same direction. They were all long entries. So it's the strategy is not set up to, buy again and again and again and increase your position size. It's just set to buy once, and even if the criteria is met again, it will just hold on to that trade. It wasn't until the next signal that generated an opposite signal, that's when the trade was reversed. Why was this different than the other inside bars? Well, the difference, if you can see, is that this most recent inside bar happened on a red candle. So I believe the strategy, and I say I believe because I haven't checked yet. We can check it, we can look at the code and see what is the criteria. But what I think it's happening is that if you get an inside bar, and that inside bar is a red candle, is going to favor the short trades, and that's why this one is a short signal. Back here, we had a long entry because the inside bar was an up candle, and all the other ones that followed are also up candles, so it didn't trade again. Let's zoom out. Okay. And take a look at the strategy performance report. Now, Of course, this is not a complete strategy because one of the things that is missing here is managing money, managing risk. There's no stop. If this goes against you, then what is stopping you? In this case, what's stopping you is the other entry. So the short entry and the long entry are reversing each other. So if I pull up a strategy performance report, it's not going to be complete because it's missing that component. And you can tell by the performance summary that this strategy, although it's positive, in a 2-year back test period, I made about $2,700, but that is not something that I would trade going forward because it's missing that money management or that risk management component. Yeah, we can put it in if we want, but it's not, the idea of this class. It's just that you have these elements that you can work with and that you can do your own testing to see if they work, all right, let's look at the strategy itself to see if it's exactly what we had set. Let me right click on this inside bar. I'm gonna, from the right click menu, you have easy access to editing the easy language, and I'm gonna go and edit the long entry. This will open the easy language code. And if inside bar, using the high and the low, and close is greater than the open, this is the other condition, close greater than the open. This is an up bar. So not only has to be an inside bar, it has to be an up bar for the strategy to buy. Very straightforward and very simple. Of course, you can come here, as we had said earlier, and look at the inputs and change what the indicator is doing. Let me right click on one of these dots and edit the inside bar. So price high and price low. Yep, we can use different criteria here for the price of the high and price of the low. Let's see if we change this to highest high for a look back of 3 bars. And the lowest low for a period of 3 bars. So these are the 2 formulas that I'm typing in. Let me share them with you right here in the chat. Because that's the reason why we provide those inputs so that you can change. Or are you looking at just the high and the low of the current bar? Or are you looking at the highest high and the lowest low for the prior 3 bars? If I do that, you can see that, of course, it becomes a little bit more restrictive, and I don't have as many dots as I did before. But what this is looking for is not only the highest high of the prior bar or the low of the prior bar, it's looking at 3 bars before that, And of course, you can also change the strategy to fit that behavior. What I did is I just changed the inputs on the indicator, but I haven't changed the inputs on the strategy. Those are separate. So if you double click on the strategy, you can customize the inside bar, and we don't have any inputs here. So that's one of the things that we're not kept consistent. I don't have those same inputs. So even if I were to change the inputs, I don't have a way with the strategy to align the strategy with the study. Of course, you can go into the code and modify it and make it, the way that you want. But in this particular example where I wanted to change, the high and the low reference, the strategy does not let me change that if I use the strategy out of the box, okay? But that's just a side note. Again, I'm able to use the inside bar, not only show me, but also the strategy to take a look at some examples. Let's go ahead and open up a new chart. All right. And let's turn this into a daily chart one more time. I'm going to go to studies, add studies, and now let's take a look at the outside bar. To show me. So make sure that you click on show me here on the far left, and it's right here, outside bar. Again, I have the same thing about the plot price. You know, I can either put it right smack on the closing price, which is kind of it's gonna cover, you know, part of my candlestick, or I can choose what I just shared with everyone right there in the chat, which is the high plus half of the range. All right, let's go ahead and click OK. I'm gonna make them thicker. The color is magenta, so that's fine. And here they are. These are the outside bars. Let's go over here to the PowerPoint to define an outside bar. An outside bar is when the high is greater than the high of the previous bar and the low is less than the low of the previous bar. So if you look at the screenshot right here on the right-hand side, it's very clear. We get a bar that is big compared to the previous one. And the high must be higher and the low must be lower. Outside bars may indicate a possible breakout in price activity in any direction. You know, the price has extended more than the prior bar, but there's still some indecision. It extended to the upside, but it also extended to the downside. So now the question is, what side is it going to favor after this? Outside bars are built in, or the built-in strategy for outside bar generates long signals on up candles and short signals on down candles for the next bar. So let's take a look at some of the signals. After a significant trend, momentum slows down and outside bars may signal a lack of trend support and possible reversal. So yeah, you may have a strong uptrend. All of a sudden you see a outside bar that has that momentum that pushes prices upward, but it also has momentum that pushes the prices downward. So it may indicate, yeah, that we're slowing down and there may be a possible reversal. If you have several inside bars before momentum increases and a strong outside bar reverses the price. It can also mean trend continuation, you know? So outside bars may show up during pullbacks when the market moves sideways temporarily to possibly continue the trend. And outside bars may signal more momentum in the direction of the trend. When it comes to the strategy, though, the strategy that is built into the TradeStation platform, the conditions may be different. So we are talking about two different scenarios here. One is a reversal, the other is a trend, a continuation. And the strategy would have to be molded so that it fits one of these behaviors. I believe the behavior is just based on what is the outside bar doing. If it's an up bar, it favors the long side. But if it's a down candle, it favors the short side. Let's go ahead and take a look. Right here, I'm identifying outside bars. In fact, if I zoom in, I'm going to zoom in this most recent one. I can do the opposite that I was doing on my inside bar example, where if I go to the drawing menu and I click on trend line, I can draw from high to high, and I can draw from low to low. And this is what you get. So you get the opposite. I'm going to right click and extend left, right click and extend right, extend left. So this is what you see. It's an inverted triangle. The triangle is pointing backward and the price extends in this kind of a cone. It's interesting that this particular one, you know, it drew, you know, those lines. I mean, we drew the line from high to high and low to low. And it's interesting to see the price activity, you know, reacting to these trend lines. You can see that the price kind of moved sideways, but then again over here on this candle, it broke that trend line and we're here up here. All right, let me remove those trend lines. So for any one of these that are identified, if we draw the trend lines, we're going to have that same kind of behavior. So let's go ahead and do that right here. I'm going to go from this high to this high, drawing trend line from this high to this high. I'm just drawing the trend lines just to get a little bit more visibility of you know, how the magnitude of the outside bar. The bigger the outside bar, or the more difference there is between the highs and the lows, the bigger the cone is going to be. Interesting that this cone right here, you know, hit the trend line down here and it bounced back up. Does it mean anything? I'm just saying that it's just interesting. So from this outside bar recognition, and the reason why I make light of it is just because TradeStation is it's cannot recommend one idea over another. We can present the content and tell you how these analysis techniques are or should be interpreted, but yeah, because of being a regulated entity, we're not able to recommend one over the other. So outside bars, let's go here to studies and add strategies, because we also have strategy components created over or the based on the outside bar concept, and they're called outside bar, long entry, and short entry. I'm going to click OK. And OK, so this is using default settings. You can see that if you have an outside bar that is an up candle, meaning that it's green, the next trade is generated as a long trade. Back here, you can see the prior outside bar was a down candle, so generated a short trade. A short trade, and you can see a few days after that, that was not a smart decision because it was a losing trade. Although, if you continue and keep on going, you can see that big drop in price, but the strategy did not capitalize on this, did not exit the trade here because there's no ways to exit. This is not a complete strategy. It just reverses back and forth between one signal and the other. So yes, sometimes we see trades or missed opportunities like this one where it went in the opposite direction and we could have made this a profitable trade, but it didn't. And I don't think that if I had traded this in a live account and I would have been in a short trade for several days, I would have probably just gotten out, because by this time you would have said, well, this is kind of turning down, but it doesn't seem like it's going anywhere. So I would have just gotten out before this big drop, making, would still not be a big trade. It's very easy, to look back and see where would it have been optimal to get in and out. But that's just only in hindsight. Let's go ahead and take a look at the code. If I right click and I go to the easy language for the long entry, you're going to see that it's very similar to the inside bar, where as soon as it identifies the outside bar and the close is greater than the open, that is when it buys. Let's go here to the last type of candlestick pattern that we were going to talk about, which is a narrow range bar. Narrow range bar have a smaller range than the smallest range in several preceding bars. Okay, so let's take a look. Narrow range, you can see that in this screenshot, we have an average range, so an average range is different than the smallest range. So average range, this is a narrow range bar. So let's I'm just interested in knowing if this is using averages or just looking at the smallest range of all the preceding bars. So we'll take a look at the code and see what is it looking for. And in fact, this just, if it's using one or the other, maybe it's interesting to look at the other scenario and see if it gives you better signals. This is also called the NR4 or NR7 for the look back period, and it's popular with short-term trades. When using the narrow range study, we calculate the range using the open and the close of the bars rather than the highs and the lows by setting range 0, 1, or 2 input to 0. So yeah, you can change the way that it's being calculated by using some of the inputs. There's 3 versions here though. Using the open and the close of the bars, the highs and the lows, you set it to 2. I believe 1 is using the high and the lows. I'm not sure what 0 is. We'll take a look in the code. These are some of the signals. Volatility contraction may precede price expansion. So what that is trying to say is that if the bars are getting smaller and smaller, that is a volatility contraction, and price expansion is likely to happen after you get volatility contraction. An upside breakout may occur when prices move above the highs of the narrow range bar. And a downside breakout may occur when prices move below the low of the narrow range bar. So that's just different ways of looking at the narrow range bar. And of course, we always make the suggestion that we must use other technical studies to identify trades in the direction of the bigger trend. We can use overbought and oversold studies to identify pullbacks and bounces. All right, so let's go back here to our chart. Let's remove the strategy and the indicator. We don't have a built-in strategy for narrow range bar, so let's see if we can create it here in class. I'm going to go to studies, add study. Let's go to show me. And this one, it's called narrow range bar. Again, I'm going to make the color, let's do this pink. Okay, and the style is just going to be a bigger dot. The inputs, I have NR length, so it's looking at 7 bars back. Range option 0, 1, or 2. So 1 is going to, let's see, 1 uses true range. I mean, when you hover over the input, this is something new that TradeStation released not a long time ago. When you hover over the inputs, it tells you additional information of what to put in there. So sometimes you just got to move around a little bit so that, yeah, enter 0 to use high to low range. Just doesn't stay there long enough. Enter 1 to use true range, or enter 2 to use open to close range. So 0 is the default. 0 is using high to low. 1 uses true range, and 2 uses open to close. So you have to choose which one to use in the calculation, but you don't have to choose. You can just leave it on 0, which is the default value. And then here's the NR cell background color. This is for radar screen if you want to change the color of a radar screen cell. All right, so these are my dots for the narrow range bar. You can see that most of these dots are going to be plotted on bars that are very small. Most of them are going to be like dojis, you know, because we're looking at the range between the high and the low to be really small. Of course, the calculation changes when you're looking at the close and the open. You know, in fact, I think I would get more dojis if I would change the calculation from open to close, because you're looking for that smaller body. You know, sometimes if I look at some of these, for example, this one doesn't seem like it's a narrow range bar, but it is if you compare the range of the bar to 1, 2, 3, 4, 5, 6, 7. If you compare that one to all 7, then yeah, that can be called a narrow range bar. Let me see if it's using just straight. Let me right click and go to the easy language. One of the things that I wanted to check to see if it's using an average or just the highest and lowest. Let's see. So N bar, I'm going to have to open up the function to find out. So it's looking at the range, true range. It's looking for the largest and the smallest. It's not averaging out the range. And it's explained here in the text in green, so you can get more details by opening up the easy language code. But if we go back here to the chart, we can see the narrow range bar being identified. And as I said before, if we change this and say, I want you to look at the relationship between the open and the close, or changing this to number 2, we can see that some of the dots shifted, and some of the ones that were identified before are not any longer because of how the real body of the candles look. So most of the candles that are now identified have a smaller real body because we're looking at the open to the close. As I said earlier, we don't have a strategy based on this indicator, especially, if you wanted to test the different scenarios. Okay, what works best? Should I use, the range from the high to the low? Should I use the average true range? Or should I use the relationship between the close and the open? Those are things that you can clearly test with TradeStation. And if this is something that catches your attention, the narrow range bar, I would recommend you post in the forums. The forums is a great place for you to get assistance from an easy language programmer that can help you create these types of studies. So if you go there and you say, I have this indicator that's built into TradeStation called the narrow range bar, but I want to build it into a strategy with the 3 different calculations so that I can optimize this and say which one provides me the best results. That's the way to take a look at this, right? All right, guys, that's the information that I had for you. 3 technical studies in TradeStation, how they're formatted, some of the interpretations that they carry, and also some of the strategy elements that are associated with them. If you have any questions about these studies, make sure to join our Q&As. They're happening on Tuesdays and Fridays as of now. Tuesdays and Fridays at 11:30. You can join us for a Q&A and ask us any questions about anything related to the TradeStation platform. All right, guys, have a wonderful afternoon. Thank you for joining the masterclass today. And I hope that everyone has a wonderful day. And I'm looking forward to seeing you in my next class. Goodbye, everyone.